Hello dear traders, petar.jacimovic here. I didn't post for a good period, because I'm very busy, doing my working in the for full time, working on forex and stock market. But I decided, because this is a situation which I wanted to share with you, and I hope that you will enjoy. It's about the election in UK. Tomorrow is election in the UK, and I want to speak about the technical aspect and then follow it with fundamental aspect and what we may expect tomorrow. So let's start first with technical aspect in the British pound versus US dollar. I think it's very interesting to watch and to see what's going on. So this is a daily time frame. I have some indicators here, but the general thing is basically how the price reacts, and in context of this, I also have the stochastic and so on. So I want to speak that first of all, the pound dollar got a big drop here since heard about news about the Brexit and stuff like that. We started that when the British pound left basically the European Union, and then we got a big drop, and sound price to basically found the support near 1.2 level. So let's say near 1.2, maybe off 20-30 pips. Interesting here, the price then once it found the bottom here, then price went sideways, trading range for a month. Basically, it's September, October, November, December, January, February, March. We trade in the trading range. Anyway, there is one big thing here which happened. Basically, this bar here. I can also put you if you want, I can zoom in. So this bar basically went about 400 pips in a single day. And this was 18 April. That was when the Prime Minister May, or Theresa May, actually said that she will actually she won the election on the June 8th, which is tomorrow basically. What happened there is, if you watch by this year, we started this year in this period here, price tried to go lower, okay, tried to take 1.230 level, went for that day and then back very strongly. Look at this day here, okay. So some of the big institutions protected the price. They don't want to see the pound going lower than let's say that number 1.2. They actually tested exactly, I think, 1.2. I can check basically low of that bar. Yeah, almost even went lower. So 1.2, very well protected by institutionals, by banks and so on. So they protected. This is a key number, psychological number. This is also swing low. So this was a protection from them and very strong reaction. So this is one thing. They created something like double bottom with one shakeout here. So the second thing, we're going down through this year, and then price is going basically price went higher, then back all the way here to 1.100, some also round number, and then price went higher, again retraced it some, and then this was catalyst basically for the pound to push higher 400 pips once the Prime Minister Theresa May actually said that the June 8th will be there will be election in June 8th. So that was penetration, and not just that, that confirmed basically technically that we went into the new upward cycle on the British pound dollar. So we got let's say this is a 1st January here, okay. So what happened here is price basically you see the January, you see the February started, okay, price consolidate here, March starting, and March finishing here. It's a first quarter. nothing special happened with this consolidation, and then in this quarter we started basically upward, and we holding upward basically. So this is an upward cycle for this quarter. And the banks are basically they are also pretty much bullish on this one. This penetration actually also helped investors to give more confidence in the British pound. From the other side, we have a double bottom formation here and confirmed breakout, for example, of neckline at this point. And surprise or not, but some smart traders, institutional hedge fund traders, banks, call that how you want, they absolutely tested this neckline. So this neckline was 23.6% of the Fibonacci retracement from this lowest low point to this highest high. And price did consolidation, that's normal. They wait to see how the price will react on this level. Okay, so this was in aspect to the Fibonacci ratio. Okay, not just that there is a Fibonacci ratio 23.6%, there is a big swing high in the background from November 2016, and surprise or not, but they knew about this level pretty much ahead of time. They waiting for this price. Price tried to go here, failed to test. Tried to go here, failed to test. Fight went higher. Everyone think this will explode higher, but actually smart money waited for some correction and some good numbers there to actually pay attention and watch. And I'm bullish ahead of this election. I expect Republicans would win this. Basically we have also some news in the Friday, which analysts expecting, I think it's manufacturing, they're expecting basically positive, so they have a good expectation on the Friday news as well. So this is for me good time to buy. Okay, it is also a good time to buy in this zone here, pretty much right on this correction. You see that inside bar, bullish outside bar, so some kind of thing, but it doesn't matter. This is a 40-50 pips away from current price. So what's going on here? You must watch always fundamental catalysts to see what's going on, to see the cycles. Banks basically watch the large perspective when they decide about interest rates and what they do. So they watch a larger perspective, watching even yearly charts and stuff like that, going month by month. And I explain this very well in details in my mentorship program. So as I said, it's a very good mentorship program where I teach you different techniques to trade and models to trade or intraday or short-term perspective. It doesn't matter. So I teach you to trade a different perspectives. And also speak about the leverage and so on, right? So I'm bullish. This is a short-term buying opportunity, so I plan to hold at least to 38.2, and I'll explain from where is this 38.2 or 1.3, 150, let's say, area 140. This is my main potential skill level, but we'll watch them price around that level, because if the price spike up or go strong higher, then I will actually try to hold this for the next number. Okay, so back in here we are in the very good upward cycle, okay, for the British pound dollar. This catalyst fundamental was very strong. Now price reacted exactly how the smart money plan. It's not only because of 23.6%. Don't get me wrong. Banks are also watching Fibonacci ratio and professionals, but there must be also other things why you not just Fibonacci, so you must use that in context, right? So 23.6 was one thing, but there is also swing lows. You have a 4 or 5 day swing lows here that was also support, and then price got at this big swing high and also neckline from the double bottom formation. Okay, so it makes sense. There is a few things which are happening in this is a critical level, and that's why smart money, and as you see what the price actually went higher. Now my stop, and I speak about a lot about my stops and stuffs, and which leverage you should use, and how to avoid big losses, and how to trade properly. Most of the traders basically fail in sense of over leveraging themselves on the forex market and stuff like this, and they don't get a picture. So they must understand the fundamental aspect, the technical aspect. You don't need to be the guru, you just need to use the logic and go and reveal the puzzles basically, and gather the piece of the puzzle and then create a big picture, right? So institutions and smart money, in my opinion, they're long here. So don't get me wrong, price can still go lower, and stuff like that. I don't say this 100%, it's just my opinion on this currency pair, right? And I put all the way stop loss about 300 pips, 290 pips. My stop loss is about 290 pips. Here you can also, that's how I decided, but I go also for I go to watch 200 pips here, which is a 38.2, right? 38.2 from this massive downward movement, right? So this is a 1.3, 140, 150, right? This is only Fibonacci ratio, and because it's only Fibonacci ratio, I really expect that this, we will see on 38.2 and price reaction, but the more sense for me, there is the price actually reach this area here in the future, right? And there we may see some correction, or some larger correction, or some consolidation and stuff like that. Why this? Because again, there is a more sense, because the price action is there, confirming there is a big resistance, and there is a Fibonacci retracement, and there is a round number 1.3500. Okay, so probably my target will be to actually watch closely this level to close my position, which is about 550 pips, right? But will pay attention and probably secure my position if the price go 200 pips upward, right? So I speak a lot about this on my mentorship program, much more in details to understand what's actually going on. Okay, so you got a picture, right? You just need to use sense logic. Of course you can use indicators, it doesn't matter. There is a different way, there is probably hundreds of the ways to skin the cat, right? So you use whatever it works for you in conjunction with pure logic and understanding, right? So for example, this is a stochastic, which is also crossing here, confirming that this is a good cycle on the daily to actually try to buy, and that's confirming all of this what I spoke about. So you need a different perspectives, you need to watch for round numbers. It's absolutely what also institutions will watch. All of these stuffs which will help you to identify the good spot and good swings to trade. Okay, so you can also, because it's selection, I put a stop loss all the way here, but this, if the price go 300 pips, this will be only, for example, 3% of my account. So it's not a big deal even if that happens, but I wanted, because of this selection, to get out the potential shakeouting this buyers who went here and holding or stuff like that. And just in that case, I put this when I'm uncomfortable, with. So I hope you enjoy this. This is ahead of UK election, using the pure logic, fundamental aspects and technical aspects together, and this is how I approach, especially even if I day trade, but when I short-term trade, short mid-term trade, I like to approach in the way that I use fundamental aspects, fundamental catalysts, and trying to understand the behavior and how the banks will think and the smart money will think, and then try to ride with them and join them in their opinion. Again, this is the higher low, higher low, so 1, 2 higher lows. This is the higher low as well, higher high. So this is for me, it's a waking of the bulls of the British pound, and we'll see how how much that will last in the future. But I have my numbers. 38.2 is my first number. I actually need to see the price action. So I expect this to go test 1.3150 area. I don't see big, except the Fibonacci tracing 38.2. There is nothing ultra big there in sense of the price action or some ultra big round number there. But this is what I like. 1.3500 near the 50% retracement, actually at the 50% retracement, and the reactions in the background. So this is my short midterm view on the British pound. My stop is all the way here, so 1.2, let's say 620, 630, stuff like that. And I like this to see how it will develop. And if the price go, who knows, even here I will be happy and take 5% on this. Even if it go here and still I scale the half, close, take the 1% and 1% left to right and stuff like that. But all about this basically I speak in my mentorship program, a very detailed mentorship program, and you will for sure enjoy. You can contact me in the Skype. I'll put my username basically on Skype, my Skype username description in the video. If you like this video, you can share on your websites, you know, share with your friends, and they can watch this video and also join my mentorship program. They're interesting to start basically to start you know, trading and start professional approach and stuffs. I'm here to teach you. So yes, this will be all for this video. Leave the comment if you like. I really appreciate the comments. Leave the comment below the video. Feel free to like, and it'll be all for this video. Hope I will have time in the future. Well, if I see something very interesting, I absolutely let you know. I don't have any more time to post intraday my opportunities when I do trade intraday, because I'm very busy with my work. But once I see something like this on the short midterm swing, which I like, and you know, and I just want to let you know about that, so that you can understand basically, and you know, and hope that you can also benefit together with me. And of course, at the end, the forex involved a big risk. Don't trade with money you can afford to lose. And second thing is, don't over leverage. You know, don't over leverage. So even for example, my stop loss is 300 pips. Even the price dropped 300 pips, I will lose only 3% on my account. So you need to approach according to how to say, you need to approach to secure your portfolio at the first place, and then the results will come. You know, the results will come. Bye bye for now. Cheers, and you know, enjoy. Bye bye.